Welcome to Sathishspeaks channel. When it comes to money, there are only two problems that can happen. One is making money, and the second problem is managing and multiplying money. There are enough videos I have already put for making money. What are the 10 biggest mistakes people do with their own money? How rich and successful actually earning and making their money? How you can save effectively and how can you invest? So there are enough videos, but in this video, I'm going to explain you that how you can manage and multiply money. That's another biggest problem. In fact, I'm going to share my own personal portfolio of how I am managing my own money. Because when the portfolio is good, when you understand how you should invest your money, you have a thorough vision, then the wealth accumulation as well as the passing on wealth will be smoother and faster. So before we go into this video, a small disclaimer, this is my own money management and personal opinion. The solution or the product I invest may not be suitable for you because my risk appetite, my return expectation, my investment horizon can be different from yours. I am a very moderate kind of an investor. My investment horizon is very long. My return expectation can be different from you. So if you want to invest or follow my portfolio, number one, do your own research or consult your financial consultant. So before we go into this video, I'm Sathish. Quick introduction. I'm author of this book called Untold Wealth Secrets. Author of my second book, which is Middle Class to $1 Million. Also, I'm writing a personal finance column in Nanaya Vignam, which is Middle Class to Millionaire. Okay. So where I am investing my own money is into. In my portfolio, 10% of my money is it into gold. I very recently started accumulating gold. In fact, precisely from January 2021 onwards only, it's just about a year, I started accumulating. After the gold prices saw a peak and then a reversal, it happened, a fallback happened in the month of February. So that was the time that I started investing in gold. So 10% of my portfolio is with gold. It's not even, I can't call it as the entire thing gold. Precious metal, 8% of gold and 2% is silver. So 10% is into commodities and precious metal. So within gold, 4% is into ornaments. Of course, I have two beautiful daughters. They wanted to touch and feel the ornament, the jewels. So 4% is ornament. I sacrificed that the making charge, the GST and other parts. So 2% again physical as coins and 4% as sovereign bonds. So 8% gold, 2% silver from my entire net worth. 10%. Second 10% is with simple fixed deposit. So I want something safe also to be a part of my portfolio. So 10% is with the safe fixed deposit. No liquid funds, no overnight funds, no funds, simple fixed deposit. And 30% of my portfolio is with real estate currently. So this is asset that I have brought it in 2010 and 2012, way back. So 30% is the asset value currently in my portfolio. I really wanted to get rid of this real estate because the appreciation what I get in the entire portfolio, the real estate gives the lowest. Other assets, let it be even fixed deposit, gold, financial asset give fantastic returns, but the optimization of a portfolio, a real estate is taking away the return. I want to get rid of, maybe looking at the ways. I am not in urgent. So maybe some point in time that I will get rid of that particular asset and convert that into a financial assets. Okay, then 50% of my money currently is with financial assets. Okay, so where I am investing 50% of my money, 50% is into mutual fund and 50% is into direct stocks. So why mutual funds? After knowing after having all the expertise, after having all the time to manage and multiply my money, why not direct equities? So here I go. The reason for me to invest in mutual funds. Number one, I firmly believe diversification is very important when it comes to wealth creation. So mutual fund give me the enough diversification because asset allocation and another asset allocation within that financial asset is also important. So mutual fund gives me an opportunity to invest categories like large cap, mid cap, small cap, even certain thematic funds. If I wanted to put my money strategically into one particular category, mutual funds allows me. And more than that, it is very efficient, it gives me good return, it's very convenient for me, it is highly regulated, completely safe in terms of operations and other stuff, because we have a very strong regulator, SEBI, AMFI. So 50% of my money is into mutual funds for safety purpose, and 50% of my financial assets, within financial assets, goes into direct equity. So within direct equity, how do I pick my stock? Because most of the people makes mistake when in picking up the right stock for themselves. If I wanted to buy a stock, I will never analyze a stock first. Rather, I will analyze how the business is gonna be that particular segment for next 5 to 7 years. For example, if I want to invest in State Bank of India or HDFC Bank, I will first analyze that what is the scope of banking as an industry, as a business for next 5 to 7 years. Okay, here I go, India is an economy which is doing good, which is fairly growing at the 7%, 7.5%. And for next 5 years, it will continue to grow. Our GDP from 3 trillion to 5 trillion, 8 trillion. So banking is going to be a backbone for this economic growth. So banking will have a very good scope, high scope. So yeah, bank is going to grow. So I will determine first how the industry is going to perform for next 5 to 7 years. Not simply behind, okay, put my money into infrastructure, put my money into capital goods, put my money into FMCG company, put my money into pharma. It's a first understand how the business gonna perform. For example, take how the chemical industry going to perform. So okay, now chemical industry is a $215 billion industry. Next 5 to 7 years, it's going to be a $500 billion industry. How electric vehicle industry is going to be. So analyze the industry first, because if you have the scope to perform, then the companies will perform. If it is a dying industry, even if the company is a market leader in a dying industry, the valuations are super attractive, your money will never grow. That is how 40% of the Nifty stocks are not present currently with the Nifty 50. It was there earlier with Nifty 50, but currently it's not that, just because they miss out on the industry. They miss out on the business approach. So my first approach is that analyze the scope of the industry. The second is valuations, ROE. How the ROE is for the company, because the return on equity is a very important parameter, that without any premiums, how much the company is actually giving return to their investors, and ROCE, how much money they are putting back into business so that their business can expand. Shareholder promoters holding. So how much the promoter holding in the particular business? Is it 40% and above? Are they actually pledged anything? How much FII and DII have put their own money? These are very important parameters. PE and PB I analyze with valuations. And then finance. When it comes to financials, how much debt to equity? Because going forward, the debt-free companies will perform better than a debt-ridden company. It will have a free flow of operation without any constraints. So debt to equity, it should be very reasonable, which should be less than 1 or preferably even 0.5. I'll check that. Free cash flow for last 5 years, cash reserves, and of course revenues, how is the sales trajectory, and the bottom line, the profitability of the company. All these things I check in the cash flow statements. And the third factor is the competitive advantage. What is the one thing which makes you to buy that particular share, which is, they call it as moat, the competitive advantage. For example, when it comes to Bajaj Finserv, they have an excellent MIS system. If you give your PIN code, they will tell you that how much the customers from that particular PIN code paying back their loans promptly. So your interest rates is determined by the PIN code. They have an excellent database, wonderful MIS. Take Parle company, biscuit company. It's an unlisted share, but it is their competitive advantage is Parle-G, the mass marketing. That particular biscuit sells the largest. Take Britannia, Good Day brand, good premium biscuit brand, IRCTC. So there are competitive advantage with the specific companies, and why you are investing on that particular company, why actually people go behind that particular company. That is called competitive advantage. Everything else can fail, but this never fails. Every company will have a competitive advantage. Analyze it. And of course, the board of directors, the quality of the company, like are there families, relatives, friends in the board of directors, or they are professionally managed? Because many companies, family owned companies, they have their family, friends as board of directors. The objective behind that is to split the share profit among the family alone. If you are a shareholder, if you want to get your profit back to the shareholders, you means it should be a professionally managed board. So check the board of directors, check the distribution, check the product innovation, check the product, check the management, leadership. That all comes under quality. It is not about seeing a stock name on a news or a telegram channel and blindly buying it. That approach will never work when it comes to building up a stock portfolio, because a stock portfolio has to be focused, concentrated. It can't exceed more than 10. With the vast universe of more than 2500 companies, you want to pick the best 10 companies. You got to do your own analysis. So that is how that I build my own portfolio when it comes to money multiplication and money management. And so as when you do with this particular approach, I am sure that the money accumulation will be faster, money accumulation will be smoother. If you can't do this approach, another simple way is consult a financial consultant who will do this for you. So if you want sustainable wealth, please follow all this principle. Take a recommendation advisory from a financial consultant. If you want to invest in mutual fund, stock or PMS, my WhatsApp number already there in the portfolio. You can connect with me. I'll be happy to assist you. And if you like this content, please click the like button, because the chances of this video reaching multiple people very high when you click the like button. And most importantly, stay tuned to this channel, because I'll be bringing good contents on personal finance, stock market and equity as an investment. So stay tuned. I will see you with another interesting content.